moving on then, big news. We are very optimistic. There was some optimistic news that we are tracking this morning. Chances of recession are really waning according to the banking giant Goldman Sachs. Now, Goldman Sachs sees a 20% chance that US economy will fall into a recession over the next 12 months. And the figure is down from their earlier 25% forecast. Goldman Sachs believes a low unemployment, strong consumer sentiment augur well for the economy.
Right, and global auto major Ford Motors has gone ahead and slashed prices for its electric F-150 Lightning pickup amid efforts to boost production. Company said that prices for some of the least expensive versions of the Lightning would fall by nearly $10,000 and prices for all other versions will fall by $6,000.
An ace investor, Warren Buffett, has offloaded a major portion of his stake in Activision Blizzard as Microsoft's deal to buy the video game giant edged closer to completion. Warren Buffett has sold as much as 70% of his investment in Activision. In a regulatory filing, Berkshire said it owned about 14.7 million shares or 1.9% worth $1.24 billion on June 30th, down from 49.4 million shares or 6.3% in March.
Well, and shifting focus then, India, likely to be a major driver of Apple's 5-year top-line growth. This is according to Morgan Stanley. Morgan Stanley believes India's booming economy and Apple's investment trajectory in the country will drive growth for the company. The note also reflected a new India-driven price target increase from $190 to $220, with a bull case valuation increased to $270.
And BlackRock names Amin Nasir, CEO of Saudi Aramco, to join the board of asset managers' board of directors. Meanwhile, BlackRock said this move reflects the firm's emphasis on Middle East as a part of the long-term strategy.
Well, and the deal allowing Ukraine to safely export grain via the Black Sea has officially expired after Russia pulled out of the crucial agreement, reigniting fears about global food security, with analysts describing the initiative's demise as both an inevitable setback and a blow to markets.
And world's second largest economy, China, has witnessed a lower than expected growth in the second quarter. Now, Chinese economy grew at 6.3% at annual pace in the month of April to June quarter in the current fiscal year. Now, the 6.3% GDP print for the second quarter marked a 0.8% pace of growth from the first quarter. In fact, the unemployment rate among young people was 21.3% in the month of June, a new record. And that's not all. According to the reports, China's GDP is expected to slow even further in the coming months because of the slack in the consumer demand and the collapse in demand for Chinese exports in other economies as their post-pandemic recoveries lose momentum.
The rebound on reopening has been much less than expected and much less than in many other countries, especially in the West. And so I do think that puts some pressure on the 5% growth target. And I think the Chinese authorities and indeed the market is sort of well aware of it, right? I suppose what's happening is that the authorities are becoming more accepting of a somewhat lower growth rate because China's potential growth rate is probably declining. And not least because the demographic transition has advanced rapidly, and because I think it has to be said, what's happening in China, partly by design, is sort of the opposite of what's happened in much of the rest of the world. In China, the lockdown was much more intensive. It was much more extensive, right, because it lasted much longer and much more repeated, and there was much less government support in terms of fiscal transfers and much less in terms of monetary policy support as well. So I think, therefore, we're having, if you want to say, put it this way, a more sort of natural recovery after an extended period of lockdown, extended period of pressure on business, particularly small and medium-sized enterprises, small business, and on households. In China, they're probably, retaining excess savings and being more precautionary, and, more cautious in their behavior. So I think that helps to explain why the recovery so far has been less than expected. I would say, today's number was less than expected, but a lot of the kind of higher frequency growth data had been pointing in that direction. So maybe it wasn't such a surprise on the day. I think it's the accumulation of this kind of signal of weak economic recovery relative to earlier expectations of a Western-style rebound that has been taking place over a period of time. Looking out longer term, growth is probably going to be lower than it was, but of course, it's a much larger economy than it used to be in the days of near double-digit growth. So it's going to still be an important source of growth for the world economy, even as the growth rate slows down.